4,000 shares of 10 rupees each were forfeited for non-payment of second and final call of 2 per share. The minimum amount that the company must collect at the time of reissue of the shares are. Okay, and now you need to keep in mind whenever we forfeit shares, some amount of money is credited to the share forfeiture account. Okay, and what I'm going to do is I'm going to make the entry for share forfeiture just so that you'll understand. All right, so when we are canceling shares, we debit the share capital account. Right, so share capital account debit. Then if there is premium and premium is not paid, then we would also debit the share premium account, but we have no mention of share premium at all over here. All right. So share capital account, we are going to debit. We will then be crediting, we will be crediting the call, whichever call that is. So in this case, we are talking about the second and final call account. And we will also be crediting the share forfeiture account. Share forfeiture account. Share capital account will be the number of shares into the called up value. Okay. And that called up value per share is going to be a full 10. And the reason it's going to be 10 is because the amount forfeited, the number of shares forfeited is because of the final call of 2 not being paid. All right, so the called up value is a full 10 and the paid up value is 8. Okay, so we can think of called up as 10, paid up paid up as 8. Now 10 rupees per share into 4,000 shares, we are debiting the share capital account by 40,000. The 2 rupees of the share second and final call account, okay, which has not been paid, 2 into 4,000 is going to be 8,000. We are crediting because we are no longer expecting it. Okay. And share forfeiture is the gain that we're making by cancellation. We are canceling the person's shares. We're not giving him a refund. We are holding on to the money. And that is going to be the paid up value per share, okay, into the 4,000 shares, which is 32,000 rupees. Now, the question that is being asked is the minimum amount that the company must collect at the time of reissue of shares will be. Okay, and we have been given options. Now, because we have cancelled somebody's share and we are reissuing, we have a buffer of 32,000 rupees altogether. And on a per share basis, keep in mind it is 8. That means if we are selling it now to a third party, we can afford to give them a discount. Remember, we cannot issue shares at a discount initially, but when we forfeit shares and we reissue, we can issue it at a lower price. And that discount, if any, gets debited to the share forfeiture account. The balance in a share forfeiture account is 32,000, which is 8 rupees per share. So we can give a maximum discount of a 10 rupee share to the tune of 8 rupees. That means minimum we have to collect is how much? It's going to be 2 rupees. Into how many shares? 4,000. And therefore, our answer is going to be 8,000. Although it'd be rather sad if you're reissuing shares at only 2 rupees each. I'm sure you'll get a better price. Anyway, 8,000 is our answer. Any doubts? Feel free to comment. And as always, please like, share, and subscribe. Thank you.